Here's what they don't tell you about the mortgage industry. You can use your home as an investment vehicle to get you ahead and help you build wealth. Instead, they want us in a 30-year debt trap. I'll show you how I just helped a client pay off their $379,000 mortgage in under 4 years. This will save them almost $250,000 in interest alone. And get this, our effective rate on the mortgage will be under 1%. Not like most of you are chasing that 6% or 5% interest rate, I'm getting it under 1%. And if you're tired of your hard-earned money going towards interest on your mortgage and your mortgage balance barely going down, you found the right page. Make sure to follow me. My name is Sean Uyehara. I'm a mortgage lender. Been doing this for almost 20 years, and it's now my mission to help you get out of your mortgage debt as fast as possible. My team and I specialize in the First Lien HELOC, where we can literally show you how you can potentially pay your home off in years instead of decades. This is the one strategy I wish I would have known when I first got into the business. So here's where the story gets great. They had 27 years left on their mortgage, and we paid it off in 3.3 years. So if they would have continued to make that mortgage payment into an index fund versus their mortgage servicer, they would accumulate another $2 million worth of wealth using our strategy. Let me show you exactly how we did this. So we're refinancing this $245,000 mortgage. They've had a 30-year fix at 3.3% for the last 5 years. Their take-home pay every month is about $17,000. And we're reallocating $20,000 into this HELOC. Remember, we use the HELOC like our checking account. Whenever we get paid any idle dollars that we have, we want to move that money into the HELOC. It's going to pay our balance down dollar for dollar. And the way interest gets calculated on this mortgage is based on the average daily balance. So the faster we drive the balance down, the less interest we end up paying on the mortgage. All while still giving you access to your equity the entire time. So it's not like a regular mortgage where you're putting more money into your home and you can't touch it because your bank tells you you can't have access to your money unless you refinance or do a HELOC. At the end of the month, after they cover all their bills and expenses, we've got about $8,900 left over. Here's their current mortgage if they took it out to its full term, 27 years. Here's our HELOC. That same loan balance, $379, gets paid off. 3.3 years, 39 months, saving him $248,000 in interest. Average rate on our HELOC is 8.3%, but because we pay interest based on the average daily balance, we're only paying $51,000 worth of interest, which gives us an effective APR of 0.859%. Can't beat that today, can you? Now let's just say they don't want to buy more real estate with this line of credit, and we just start putting our principal and interest back into an investment account. Let's say an index fund spits out about 10% a year. If we continue to make that same principal and interest contribution towards an index fund versus a mortgage servicer, we would make another potentially $2.1 million. Their home would now be worth about 1.2. We're amassing another $3.3 million worth of net worth versus just paying off your house and not being able to create other streams of wealth for yourself. You need to stop doing what everybody else is doing. The old ways of what your parents and even your friends are probably teaching you on how to pay your home off ain't gonna work these days. Learn the strategies that the banks hope you never find out. Make sure to follow me for more ways to learn how your mortgage can work for you versus against you.